President Donald Trump just floated the idea for a 50-year mortgage, and it seems to have some backing from the FHFA, with them also making a comment from the director that this would be possible. A lot of people have already given their opinions on what they think about the 50-year mortgage and if that's good or if it's bad or if it's in the middle. Today I'm going to break down my thoughts on exactly how I would think through this as a realtor selling a lot of houses and seeing a lot of folks in different socioeconomic status and how I think it affects different types of buyers. Let's get into it. If you're new here, my name is Terry. We make videos on all things Austin real estate and real estate in general every single week. Would really appreciate it if you would subscribe and leave a comment about this topic down below. Let me know what you think. I'm actually really curious. So, as many of you may know, the 30-year mortgage was first created in the 1940s for new construction homes in 1948, and then 1954 it was approved by Congress for previous construction, existing houses and inventory. And the 30-year is an awesome tool for a lot of folks, right? We've had the 15-year for all of that time, and yet a large majority of buyers do elect for the 30-year because everybody wants that lower payment. 50 years adds another 20 years on top of that. But there's a couple things to take into consideration. And one is that on average in the US, people are trading houses about every 12 years. Whether it's a 50-year amortization or a 30-year amortization, most of the first 10 years you're paying interest mostly, and that wouldn't change drastically from a 30-year to a 50-year. So for folks that fall into that category, they would be getting a lower payment for a period of time and not having to worry too much about the much longer term effects of a 50-year versus a 30-year because they're going to be trading out of that asset within 12 years. But there are a good amount of people that do stay in their houses and do pay them off. And to that degree, I think a 50-year mortgage, similar to other financial products or tools, are going to benefit a savvy consumer and be a potential detriment to an uninformed consumer. I think the argument for the 50-year mortgage, it's going to make payments more affordable for a certain socioeconomic status, people who are renting right now who cannot afford to buy. But on that same hand, it's okay, while those people might have some more money, it's a tough economy right now, and that's well known. In that tough economy, they're going to spend those extra dollars. I've seen the argument that, okay, if you take that extra money you're not paying on the principal for a 30-year versus a 50-year, and you put it in the stock market, people aren't actually going to do that in practice. The people who this loan is intended for are not going to be saving that extra money and putting it in the stock market. They're going to be spending it. And my worry is that more and more consumers at the bottom end of the socioeconomic status in the United States are becoming more and more saddled with debt. And that's what a lot of critics of the 50-year mortgage say about this as well, is we're just saddling more debt into this already a little bit hurting economy. Now, potential benefits of this is that for the savvy buyers, you now have another tool where it's that much easier to qualify for a mortgage on a property based on payments. So for like my case individually and many people that I know, a large strategy for building wealth is moving into a primary residence, fixing it up, and moving after 2 years. And being married, you can take up to $500,000 tax-free upon the sale of that property. And this would be another instrument, another tool to lower the cost of those few years that you're staying within the property. And that's a big argument for this loan. Is then a tool for those types of people, but that's a very small subsection. I don't think we should be catering entirely towards that. Another potential benefit of this 50-year mortgage is this would give a boost to housing markets in areas that need them. You have areas that have a lot of inventory, that have pretty lenient laws for new builds and are sitting on quite a lot right now. And this does open up another buyer pool to help simulate that economy. I don't think most markets actually need it. Even in the market that I'm in Austin, Texas, we do see about 130% listings to registered buyers ratio. So there's a lot more listings than there are people to buy them. But it's not like we're in a terrible real estate market here right now. It's just one where more negotiations are happening because new builders are able to come in and throw a lot of inventory onto the market. So I don't think necessarily we need a 50-year mortgage in order to offset that. So Is it good? Is it bad? I think it's really up to you as the consumer. I think if it's out there, I think a lot of people will choose a 50-year mortgage over a 30-year mortgage because in theory, in practice, houses go up in value. So you buy it and maybe you sell it in 10 years. I think it could cause some more inflation of housing prices. And I don't think that's generally good for the average consumer. I also think it saddles them with a bit more debt than maybe they would be comfortable with over the long term. And if we get into a market where housing prices stay stagnant for a number of years, or they just go up slightly, or if they go down for a number of years, people locked into those 50-year mortgages are going to be locked in, and they're not going to be building a ton of equity or any equity at all within those periods of time. So like really any other financial product that gets introduced to the market, it has its inherent risk, it has its inherent potential upside. So let me know what you think down in the comments below. Is this a good thing? Is it a bad thing? Are you with it? Are you for it? Regardless of the politics, what do you think about the potential of a 50-year mortgage?
Subscribe, subscribe, subscribe.